Hello everyone, and welcome back to the channel. Today, we're diving deep into the gold market, which has been showing some incredibly exciting price action. Gold just smashed through a critical resistance level at 4,010, and the buzz in the market is palpable. Everyone's asking the same question. Is this the beginning of a major new rally? Or are we looking at a classic false breakout? Let's break it down together and see what the charts are telling us. If we zoom in on the short-term chart, the picture becomes much clearer. We can see a distinct upward trend forming. One of the key indicators I'm watching is the relationship between the moving averages. Right now, the 7-period moving average is trading comfortably above the 200-period moving average. For those of you who follow technical analysis, you know this is a classic bullish signal, confirming that the short-term momentum is firmly in the hands of the buyers. This isn't just a random spike. It's part of a broader, developing structure that suggests strength. The price action has been constructive, building higher highs and higher lows, which is exactly what we want to see in a healthy up. This alignment of moving averages gives us a solid foundation for our bullish thesis, suggesting that dips are likely to be bought up as traders look to join the prevailing trend. Let's retrace the recent price action to understand how we got here. Gold spent some time consolidating, trading in a tight range roughly between 4,007 and 4,008. This period of consolidation was crucial. It was like a coiled spring, building up energy as buyers and sellers battled for control. Think of it as the market taking a deep breath before the next big move. And that move came when gold finally gathered enough strength to break out decisively above the 4,010 mark. This level is significant, not just because it's a round number, but because it represented a ceiling for prices in the recent past. Now that we've cleared it, 4,010 has flipped from resistance to a potential support level. The key now is whether the price can hold above this zone. If it does, if we see it successfully retest this area and bounce, it would be a strong confirmation that the bulls are in charge. In that scenario, the next logical target on the upside would be the 4,018 to 4,020 area. This is another important zone where we've seen selling pressure in the past, so we can expect some resistance there as profit takers and new sellers might step in. So, for all you traders watching this, how can we translate this analysis into a concrete strategy? Let's talk about the key zones to keep on your radar. The primary area of interest for potential buyers, or the buy zone, is now the region between 4,007 and 4,010. A pullback into this area could present a good opportunity to enter a long position, as it represents the former resistance now acting as support. Of course, no trade is without risk, so managing that risk is paramount. A logical place for a stop loss would be just below 4,005. A break below this level would invalidate the immediate bullish structure and signal that the breakout has failed. On the upside, our initial take-profit target remains the 4,018 to 4,020 zone. This gives us a favorable risk-to-reward ratio. The core idea is simple. As long as gold maintains its footing above the 4,007 support level, the buyers are clearly in the driver's seat. The momentum is with them, and the path of least resistance appears to be higher. However, we must always consider the alternative scenario. Trading is about managing probabilities, not certainties. We need to be cautious and prepared for the market to move against our primary expectation. If the price were to fall back and close decisively below 4,007, that would be a major red flag. It would suggest that the breakout lacked genuine buying power and could have been a bull trap designed to lure in unsuspecting buyers before a reversal. A failure to hold this level would likely see the bullish momentum evaporate quickly, and control could shift back to the sellers. So, while the current outlook is positive, keep a very close eye on that 407 support. For now, all signs point to the bulls having the upper hand. The momentum is strong, the structure is bullish, and gold looks primed and ready to challenge those higher resistance levels. It's a fascinating setup, and the next few trading sessions will be critical in determining whether this rally has legs. Let's expand on that target zone of 4,018 to 4,020. Why is this area so significant? Looking at historical price data, this zone has acted as a formidable barrier in the past. It's a level where supply has consistently overwhelmed demand, leading to price reversals. This is what we call price memory. The market remembers these levels. Therefore, as we approach this zone, we can expect to see a few things happen. First, traders who bought lower perhaps around the 4007-4010 breakout, will start to take profits. This selling pressure can slow down the ascent. Second, new sellers or bears will see this as an attractive level to initiate short positions, betting on another rejection. The combination of these two forces makes the 401-84020 range a natural battleground. A clean break above 4020 would be incredibly bullish, signaling that the buying pressure is immense and could open the door to much higher targets, potentially towards the 4030s. Conversely, a strong rejection from this zone could send the price right back down to test our 4010 support. How the price behaves in this key window will give us a wealth of information about the true strength of this rally. Now, let's put this into a broader context. What are the fundamental drivers that could be supporting this move in gold? We can't just look at charts in a vacuum. Often, technical breakouts are fueled by underlying macroeconomic factors. Is there geopolitical tension brewing? Are there new inflation figures that are spooking the market and increasing demand for gold as an inflation hedge? Are central banks signaling a more dovish stance on interest rates? A lower interest rate environment typically reduces the opportunity cost of holding a non-yielding asset like gold, making it more attractive. Understanding these macro catalysts is crucial because they can determine whether a move is a short-term technical play or the start of a longer-term, fundamentally driven trend. If strong fundamental reasons support this rally, the probability of our upside targets being met and even exceeded increases significantly. So, while we focus on the price action, remember to keep an eye on the headlines and economic data releases that could impact the precious metals market. This dual approach, combining technical and fundamental analyses, will give you the most comprehensive view and help you make more informed trading decisions. So, to recap our game plan, the immediate trend is bullish. The breakout above 4010 is a significant development, and this level has now become our key support. Our strategy is to look for buying opportunities on dips towards the 4007-4010 zone, with a protective stop loss below 4005. The initial target is the resistance area between 4018 and 4020. Failu told 4007 would be our signal to step aside and reevaluate, as it would indicate the breakout has failed. But for now, the path of least resistance is up. The momentum is with the bulls, and gold appears poised to continue its climb. This is a textbook setup, but as always in trading, execution and risk management are everything. Don't get caught up in the hype. Stick to your plan, respect your stop-loss levels, and trade what you see on the chart, not what you hope to see. Thank you so much for joining me for this analysis of the gold market. I hope you found this breakdown helpful and that it gives you a clearer picture of the current opportunities and risks. The markets are always moving, and we'll be here to track them every step of the way. If you enjoyed this video and want to stay updated with more market analysis, please hit that like button. And more importantly, make sure you're subscribed to the channel and have turned on notifications. That way, you'll never miss an update. I'd love to hear your thoughts on gold. So drop a comment below and let me know if you're bullish or bearish. Thanks again for watching, and I'll see you in the next video.